On the 21st of February 2022, I indicated that there is a pattern that has always been occurring with SLI stock, that it always closes above its 10 and 20-day moving averages by the end of every month. And when I pointed that out, it was on the 21st, and exactly 7 days afterwards, that is exactly what happened again. So this is the last trading session of February 20, that is 28th of February. You can see that. So this is where the stock closed. It closed at 6.52. Its 20-day moving average is at 6.44. Its 10-day moving average is 6.34. So it closed at 6.52 easily. You can see that it closed slightly above those moving averages. That has been the pattern. Apart from, I think, on one occasion it just closed in between. It didn't close above the both of them, but closed above one of them. So let's go back again and see. This is okay. That was here. It was here. It was as at the end of January 2022. It closed above its 10-day moving average, but not above its 20-day moving average. But before that time, on the 31st of January, above its 10 and 20-day moving average. Okay, let's see again. This is the last trading session of November 2021, above its 10 and 20-day moving average. This is the 27th. Okay, this is the last trading session of October, 29th of October. Is that the case? Yes, 29th of October was the last trading session. It closed above its 10 and 20-day moving averages. So I think what happens, amongst other things, is that at the end of the month, maybe the sort of hedge funds, because it's usually them or institutional investors or traders or institutional houses, they tend to balance their books at the end of, sometimes at the end of every day, at the end of the week, at the end of the month, some sort of balancing takes place. So it may be that they are buying, they tend to buy back their some of their positions, buy back some of their short positions to maybe balance the books and all that stuff, So we can see that here. This is at the 27th. It was rallying. 27th of October, it was rallying. A couple of rallies was occurring. I wouldn't probably necessarily put it back down to short covering, but definitely some short covering might be part of what drove it up there, because short coverings, they're very, very important, for every stock that is rallying. Definitely short covering positions are most certainly involved to some extent. So you can see, yeah, it rallied there but pulled back sharply. The pulled back sharply from the 28th. From that 28th, that was it looked like a sharp decline from 12.29 to 11.39. 12.29, almost $1. Not a huge amount, but you can't rule it out. But all in all, it's closed above that all those moving averages. Pulled back, but essentially did not fall below the 10 and 20-day moving averages. Could it be that they had already bought back and it looked good, and probably they had maybe the figures they had, or maybe they had the figures they had already, and some other people were shorting again. But maybe it doesn't present a very even though it doesn't really present an accurate picture. But what is certain is that it did close above that moving the 10 and 20-day moving average. It mustn't really be on that day. It could also be a few days before that. and they can always change their strategies because they know that we know that's what they also what they do. So we have this case now, 29th of November. We can see here, see how the lines are. The lines are quite closed. They're not quite tight. It's usually an indication of what shorts have done. Okay, you can see this was the 26th. Yes, 26 must have been a Friday, and then on the Monday it spiked above. So it may have been a short covering, sharp decline. Okay, see here, see that, very tight, and then maybe they shorted on the 26th, which is a Friday, bought back on the 29th, which was a Monday, and things closed there, balanced their books, or got the sort of figures they need for the month. And then we have, that's more of a what involved a significant amount of short buying and covering, short opening and covering. And we have here again the 27th of December. Also, this is 27th, and this is 29th, 27, 28, 29. It's at 29. It was in between a 10 and 20-day moving average, and then by the 31st it was above, sufficiently above, you know. So it didn't pan out well, but maybe it doesn't look like it wasn't perfect on the first. It wasn't perfect on the at the end of January, but you know, they may still have gotten what they want. So the point I'm trying to make is that you know, it has happened a couple of times now. You know, 1, 2, yeah, still counting, 2, 3, 4, 5. Even if you're going all the way back, 6. This is exactly September 7. September. Yeah, September as well, all the way back September. That's 7 times. And some of these peak spikes above, you know, they tend to be at the end of the month. Okay, this wasn't at the end of the month. So going back all the way to September, that was when this pattern started to occur. It mustn't be perfect, but let's see how it's going to pan out in this for the end of this month, March. The month we have how many more sessions before the month ends? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, almost 2 weeks of trading. So fingers crossed, we'll see how it's going to pan out, and see what you make of it. There's something there. There's something there. You know, SLI. There's a lot of skepticism towards the stock. Still roughly penny stockish. So let's see what short interests for SLI. There was a short thesis concerning the stock. Short interest is at 7.43. So let's see what short squeeze is saying about that. About the stock SLI. Short interest is 6.77%. So it closed now it's down 6.95 in this post market session. Okay, so see what you make of these patterns. We still have another 2 weeks before this month ends, this month of March. Okay, and thank you very much for watching this video.